The way the government seems to have brought this tax in is they're not subjecting this tax to tax under the head capital gains. The reason why we are accustomed to reading tax on gains is because all taxes for everything that you mentioned, stocks, land, mutual funds, etc., are all subjected to tax as tax under the head capital gains. This tax that has been brought in is a very specific tax. It's tax on virtual digital assets or crypto. And this tax will be levied at the maximum marginal rate, irrespective of period of holding. So there's no short term, long term. All concepts that belong to capital gains, therefore, don't apply here. This is tax which will be charged at 30% at the maximum marginal rate plus surcharges. Only one deduction will be permitted, which is the original cost of acquisition of the asset. So let's say I acquired the asset at 100 rupees. I sell it at 200 rupees. Whether I hold it for 1 year, 2 years, 5 years, 20 years, does not matter. 200 minus 100 will be my income, and that will be taxed at 30% on a full income tax basis, 30% plus surcharge on a full income tax basis. No offsets shall be permitted against it. So the reason why it's not under the head capital gains tax is the fact that the government did not want to get into the entire framework of capital gains tax. There's a certain framework of advanced tax there. There's a certain accepted framework of expenses being allowed, of capital gains being computed in a certain way, indexation being permitted, and so on and so forth. They're saying it's a specific category of asset. I'm saying it's ordinary income from here and on, taxable at maximum marginal rate.
I think whenever as lawyers we use the word sale, typically we always use the word sale for money consideration. So that's where the Sale of Goods Act comes into play. So you typically will find sale of goods, sale of services, where typically there is one leg which is the goods leg and one leg which is the money leg. But here they recognize that if you see, for example, further down, they talk about exchange between different virtual currencies, which are typically in the nature of barter, or at least not for money consideration. So they want to cover a variety of such transactions which are beyond merely sale for money consideration, and money as we understand it to be, right? Which is Indian currency or foreign currency. Really what they want to say is, if I sell for money, we will cover it. If you transfer for other cryptocurrencies, made gains or losses based on that, we will cover it. Okay. And then, of course, any other barter that you do with respect to such goods vis-a-vis other services that you want to purchase. So all of these are inherently getting caught in the word transfer. That's the reason why they've used this word strategically as a transfer of thing, rather than use the word sale to restrict.
Okay, so see, first of all, let's understand that the government views this category of assets almost akin to speculative losses and gains. And I think that's the way the finance minister also, if you hear her speech, also alluded to that. So she did not call it speculative, but she said period of holding and so on. Some such words she used. I don't exactly recall what word she used, but she was alluding to the fact that these are like speculative assets, and therefore the government has, in a sense, brought it to tax also within a similar kind of framework, which is why they say losses on crypto cannot be offset against anything else, against any other source of income. One interesting aspect, and I don't yet know, it's too soon after the budget, I don't know if Badri has a point of view on this. One interesting aspect on this is, while you very clearly said losses on cryptos can be offset against gains on cryptos, I'm not sure that the wording is quite so clear, because the wording of the main section actually says that no loss, no allowance, nothing shall be offset except cost of acquisition. Now, therefore, does that operate as a restriction to say loss and gain will be computed for each sale of a crypto asset separately, and therefore even inter se, the losses and gains cannot be offset? I'm not so sure. I had a read on the provision, and my initial reading was that perhaps the intent is you just capture all the gains at one level, subject them to tax, and the losses just vanish. Now, I don't know what Badri's reading of the fine print is, but I'm happy to be corrected here.
We are having this problem when it comes to gaming laws already. Okay, Where, for example, when I'm playing two games and I win something in game A, whether I can set off against the loss under game B. Okay, and this is an actual litigation, an actual issue which is going on in a similar area. You'll find that the provisions are very similarly worded with respect to gaming laws and betting and gambling in that regard.
I say I have 2 Bitcoins. Okay, I sell them both at different points in time during the financial year. On one there is a loss, on one there is a gain. Now it's part of the same block. But what is he saying? First, when I sold the first asset, as on that date, I'll compute the gains on that sale. I'll compute the income from that sale, not gains on that. I'll compute the income from that sale. The income will be computed by applying the main provision which says no losses, no expenditure, no allowance. And therefore, the income will be the income which is 200 minus 100 in my example. Yeah. Let's say on the second transaction, I get a 40 rupee loss. Where is the provision which allows me to offset the 100 against the 40? Even when the finance minister spoke about this, she said the losses will not be allowed to be offset against any other income. That is the word she used. So when we got out of the speech, my first reaction was that losses inter se within the category of digital assets, virtual digital assets, will be allowed to be offset against one another. But when I read the law, which is what will be finally interpreted and applied, I find that there is difficulty in that interpretation. So look, I mean, if you're non-resident, then there's the whole question of situs, right? Then why are you even subjected to Indian tax? I would assume that if I'm resident in Singapore and I trade in Bitcoins there is no reason for that Bitcoin to be taxed in India, for any income arising from the transfer of that Bitcoin to be taxed in India. So in a sense, therefore, this provision is intended to apply only to Indian residents where there is a basic situs of taxation.
I think transaction post 1st April 2022, there's clarity. Okay, yeah. There, I think there's no question about it. For the people prior to that, we have always been saying that either it will be capital gains or it will be your profits and losses, gains and losses from profession and business. Okay, so the main thing that we always say is that for the past, a lot of other issues, for example, if it's capital gains, indexation, and so many other issues which were to be taken into account, people used to argue at some level that these are not goods at all, these are not assets, just transfer of value. It should not be under capital gains, or it should not be. I think those disputes, some of this will continue to happen prior to that. The key thing is that if it is capital gain, then you get certain benefits, deductions. I think definitely for gains made prior to 31st March 2022, okay, there could be benefits depending on what it is. But clearly those are not going to carry forward when you're going into this thing. I also know a large number of people have taken a view prior to this amendment that no capital gains or business income is payable on purchase and sale of cryptocurrency on the basis machinery provisions are not there, charging section is not clear, and so on and so forth. All of that disappears. I think post 1st April, that regime is going to be there. I think prior to that, it's really going to be based on issues relating to capital gains and business income issues. I feel is that now what the government is trying to tax this cryptocurrency is the highest rate that is possible to be taxed on cryptocurrency according to me in this structure. Okay, any other type of sale is going to be at a lower number, that is effective rate of tax on such transaction prior to 1st of April will be lower than this. So based on that, if you want to pay the tax, if you want to sell the cryptos, pay the tax and then be out of it, by all means. But as you know, these are all asset classes that you hold for investment purposes and so on and so forth. So I don't really have an answer to that. But yes, I think government is trying to tax you at the highest effective rate of tax on these cryptocurrencies going forward. So anything before that is probably going to be a lower rate of tax for you to apply on this asset.
And the recipient receives the asset. So let's say I were to gift 1 Bitcoin to you, you would be taxable at the time I made the gift, even though you may not have realized money value of it. The government has amended Section 56 of the Act as well, to provide for taxation, and the gift will be taxable as soon as the asset comes into your ownership.
Yeah.